please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Bulls maintain the momentum on Dalal Street as Sensex gains nearly 200 points. Nifty reclaims 10,700 with aplomb. Midcaps outperform blue chips.
Bank stocks perk up in trade after RBI eases rules for foreign investments in government bonds. Housing finance companies also surge after they have been allowed to access external commercial borrowings to raise funds.
HDFC shares rise after the company reports a stable second quarter. India's largest mortgage lender clocks a 40% growth in profit, but net interest income rises by a modest 4%.
Kotak Mahindra Bank is also on target as shares surge 2%. Profits rise over 27%. Asset quality remains healthy and sees even a marginal improvement.
Reliance ends the day over 3% in the red after its fourth quarter results showed weak refining margins and a slightly muted performance in telecom. Axis Bank also closes 4% lower after the stock saw a massive rally on Friday.
Announcement of a share buyback by PC Jewellers fails to excite the street. The stock loses nearly 40% from the day's high. Bakrangi on the back foot as well after PwC resign as statutory auditors. Even Indigo slips close to 0.5% as Aditya Ghosh steps down from the top job at Interglobe Aviation.
All right, those were the top 5 headlines from the day's trading action. Hello and welcome to Markets Today Talkback, the show where we tell you about everything that happened in the 8 hours of trading in just 5 headlines. I'm Lata Venkatesh, with me my colleague Surabhi Upadhyay.
Hi, Lata. Good evening. Yes, a good day for the markets. We will be detailing a lot of the action. Over the next 30 minutes, we will discuss the top 5 market headlines and our experts would be answering your stock-specific questions as well. Joining in to answer those queries today are IIFL's Sanjeev Bhasin and market expert Sudarshan Sukhani. We will also get in views from Mitesh. Well, joining in, before we get to all that discussion, let's just take a look at how the day transpired. It was green pretty much throughout the day. And Lata, what was your sense on the sort of earnings that we got? Some big ticket financial earnings, and it seemed that it was advantage bulls?
Well, it does look like there is a upbeat bullish move even globally. Although Wall Street was somewhat muted on Friday, it came on the back of a fairly strong week. As well today, Asian markets, despite not having China and Nikkei trading, we saw a very big rally of 1.7% on Hang Seng, and other markets also did well. As well, earnings, whether it is Korean earnings or whether it is US earnings or whether it's Indian earnings. You know, Reliance, you may squabble about margins, but generally the earnings, even for that big company, or, you know, if you went down the line, for most of the companies that have been announcing numbers, as Shriram Transport, and Equitas, and RBL Bank, every one of them have actually stunned the street with their numbers. And today, of course, you had the DHFLs and the Kotaks and other companies coming out with numbers. So clearly, this is an earnings-led momentum as well and a global-led tailwind. And as if to place the icing on the cake, crude prices also fell off that $75 mark and now closer to 73. What more would the bulls want?
Absolutely. So it was all guns blazing on the green side of the screen. Let's quickly break this down into stock-specific action for the day as well, quickly to run through the movers and shakers of the day. Well, as we've been telling you, earnings is what led the street action. So Kotak Mahindra Bank right on target on every parameter. HDFC, these were stocks holding out in positive territory. Interestingly, beyond these two, banks were a bit of a mixed bag. So check out the drop on Axis Bank today after the 10% rally on Friday. Today was a day of consolidation and correction. Same story for ICICI Bank, but Yes Bank continued to shine away, one of the best performing stocks on the Nifty. IT continued to support the market, no problems there. So TCS, Infosys, HCL Tech, all these big giants were firing away today. Not just this, lots of support coming in from other index heavyweights as well. So no complaints from the bulls, whether it's HUL, whether it's L&T or something like Titan. So the buying trends were fairly intact. Beyond the Nifty 50, mid-caps, as we told you, actually were outperforming the benchmark indices today. So some examples, India Bulls Real Estate, IRB Infra, CG Power and Gati. Remember, Gati was a star from last week and some of the buying patterns continued today as well on that stock. Housing finance, as Lata mentioned, the spotlight was on earnings. So DHFL, again, a great set of numbers. Stock ended positive. Repco Home Finance was the one that was shining through, 7.5% higher. Canfin Homes perhaps has been a bit of bit of the red if you talk about earnings that came in last week, and that residual reaction was playing out on the stock today, down about 5%. Last but not the least, as we told you in the headlines as well, just a reminder, absolutely no sparks on this one. PC Jeweler down nearly 20% despite the promise of the buyback.
Fair point. That's a great roundup, Surabhi. But let's get the overall picture about trade tomorrow, or rather day after tomorrow, since tomorrow is pleasantly a trading holiday. Well, Sudarshan, Nifty's just shy of 10,750. Would you say that, it's quite clearly a long market? Where is the next resistance, if any?
Yeah, good afternoon again. See, the Nifty is now in an uptrend, strong uptrend. It was. Then after that 8-day consolidation, we saw a decisive breakout on Friday. That breakout confirms that there is more upside left in the index. So the Nifty is a buying opportunity. And as I've explained earlier, the Nifty Bank has a very attractive bullish pattern. Now today afternoon, there was a small sort of shying away from new highs in the Nifty Bank, but that's minor. The Nifty Bank and the Nifty are both opportunities to be long in. If you are not long, unless something different happens, Wednesday morning is another chance to go long in these indices. I think there's more upside here. They may consolidate, they may also have some minor dips, but the trend is very clearly on the upside.
Well, thanks for that overall picture. Now let me get to the second major headline of the, from the day. Bank stocks bucked up in trade after the Reserve Bank eased rules for foreign investments and government bonds, as well allowed housing finance companies access to external commercial borrowings, which led to all those Repcos and Indiabulls Housing and DHFLs also to rise. Just a word on the easing of rules. Until now, foreign funds were allowed to buy Indian bonds, but they had to minimum have a maturity of 3 years. So they could be redeemed only after 3 years. The idea was to prevent hot money. Now, probably the RBI believes that the market's mature enough and all those restrictions have been removed, so foreign funds can buy one-day paper, one-month paper, basically T-bills, as well as nearer maturity corporate bonds. Even corporate bonds had a 3-year residual. Now it is 1-year residual for corporate bonds. And even restrictions stock-wise have been increased for corporate bonds and, for government securities. The expectation is that when the bond markets open for trade on Wednesday, the bond yields will be a good 5 basis points lower for government securities. But for corporate bonds, they could be lower even by 25 basis points. That was one reason why you saw a lot of the NBFCs do well. But for housing, there was an extra boost because they can now access foreign funds, external commercial borrowings. All right. With that preface, let's get to the first question.
Absolutely. So our first Twitter query comes in from Prashant. He has 600 shares of Yes Bank, bought them at a price of 323 rupees a piece. He's asking whether he should sell shares at this level or can he expect 400? He is a medium-term investor, he says. Okay, Sanjeev, let me come to you. Yes Bank, of course, pleasantly surprised the street. No hidden skeletons, no issues with the numbers. Do you think 400 is on the cards?
Yeah, so I think this is one of the banks which has not come out with anything as a disclosure, and the divergences from the RBI observation was at the minimum. Also, the asset quality has been rather steady. So I see no reason why this stock shouldn't rally another 10%. In the short run, it has moved up almost 15% from the recent lows, close to 285. We had a buy around that level. We think, yes, 385 to 400 by the end of the year is definitely on the card. It is one of the stronger banks on the private side, and it is helping the bank Nifty actually go higher. So I would say stay put. If you want, keep a stop loss, but it's better to be in this bank with a slightly longer term period, and you could definitely exceed 400 rupees in the next 2 years.
Okay. Well, now we have a caller. Devin Shah is calling us from Ahmedabad. He has a question on LIC housing. Well, Mr. Shah, kahiye, what is your question?
No, I had purchased LIC housing about 9 months back.
Okay.
The average rate is 675. So, and the stock is not performing well in spite of HDFC and other banks performing well, NBFCs performing well. So what's the outlook on LIC housing?
Okay, I'll first give you a technical view from our expert. Sudarshan, if you can help Mr. Shah.
Well, LIC housing doesn't appear to be outperforming in the near term. So you might be well advised to shift from LIC housing probably to HDFC, the housing finance company, and a private sector bank, which is either Yes Bank or IndusInd Bank. So you stay in financials but get out of LIC housing. I do not think LIC housing will outperform. So you should consider exiting.
Okay. Sanjeev, your thoughts?
So I'll be slightly contrarian. I think it's a very pedigree company, but it has suffered because of the higher cost of borrowing and some asset deterioration. However, you know, this last quarter has pleasantly surprised. They put that behind them, and they've assured that the NIMs, the net interest margin, you know, they do it in a low teens of 2.6 to 2.7. That should start to see acreage. Secondly, it's a very big brand, and I think as the Housing for All gathers steam, the numbers should justify in the next 2-3 quarters well on the upside. I would say you could get levels of 650 to 675 in the next by the end of the year, or maybe by March of next year.
Okay. All right, gentlemen. Mr. Shah, thank you very much for joining us, and Sudarshan and Sanjeev for helping him. We get to the third headline.
Absolutely, and those are the big earnings of the day. Kotak Mahindra Bank, those shares were up 2% as the bank's fourth quarter profit surged by 27%. Asset quality actually saw marginal improvement. HDFC reported a stable second quarter. It clocked a 40% growth in profits. Net interest income was up by 4%. HDFC, of course, ended the day over 1.5% in positive territory. So the question that we have on Twitter is from Jagan. He has sent us this query from Andhra Pradesh. He's got 200 shares of Kotak Mahindra Bank at a price of 885, so sitting on some nice profit. He's been holding on for 6 months, wants to know whether he should now book out or stay invested. He says he's a long-term investor. Interesting query, so making good money on Kotak. Sanjeev, is it good to hold on? Can he expect more?
Yeah, I think he stays put. Congratulations for investing and being prudent enough to stay put. I would say ride your profits. I think this is going to be much higher, given that we have, you know, in this type of quirkiness, people making a beeline for the likes of Kotak, IndusInd and HDFC, and they've stood themselves out in the sun. So I continue to think best play on the retail side, very little risk taking on the corporate deposits. And, you know, the net interest income has pleasantly surprised on the upside. I would say in the next 2 years, you could easily see targets closer to 1,500 on Kotak Bank.
Okay, so that's on Kotak, and the gentleman is sitting on 50% profits. So why not ride? Next question comes from Vinod, and that's on HDFC. He says he has 600 shares of the company that he bought at 1,120, 1120, has been holding it for 8 months, wants to know if he should hold or sell. Well, in a way, we have your answer, Sudarshan, when you spoke to someone else. But still, 600 shares at 1120, does he stay put?
Well, you stay put. It's the best of the best. This is a bull market that will last for many years, and HDFC will lead this bull market all the time. Do not worry about small time fluctuations. Just stay with the stock and you'll be surprised at the rewards in the next 3 to 5 years. Don't even think of selling it.
Okay. All right, gentlemen. Well, let's take a quick break on that note. But our experts will continue to answer all of your stock questions on the other side. Stay with us. Welcome back. Let's move to the fourth headline of the day. We saw a couple of stocks in negative territory. One of them is, of course, Reliance. The stock ended over 3% in the red after fourth quarter results showed a slightly more mixed performance, weak GRM numbers, or let's say not weak, but less than expected GRM numbers. And the performance in the telecom business also looking slightly subdued compared to the expectations. Axis Bank closed down over 4% after the stock saw a massive rally on Friday. So there was a bit of a undoing of that taking place today. We have Assis Kumar Day, who has sent this query on SMS to us. He wants to know the outlook on Reliance Industries. Wow, for the next 2 years, so long-term outlook on RIL. Sanjeev, let me toss this one to you first.
Yeah, so I would say use all declines to buy. This maybe the stock had run up in excess of earnings when they came, and I think it's routine profit booking. GRMs in this quarter were expected to be between 11 and 11.5. They have been there. Their petchem margins have also been a little bit disappointing, and ARPUs, because of the worst of price war, have been slightly subdued. However, all the verticals are doing excellent, and we think that with the volume growth and the stabilization of ARPUs going forward, all the businesses including Jio should lead from the front. Truly a $100 billion company and beyond, so we see no let up. 1250 it would be my target in the next 1 year on Reliance.
Okay, thanks for that. Our next question leaves me a little puzzled. Madhav has tweeted to us and he says he has 10 shares of Axis Bank at 108 rupees each. Now, which decade was that, 108 rupees? I can't remember. But he's asking if he should hold or sell. I don't know if you can enlighten me, Sudarshan, but what is the next move in Axis Bank?
Well, yeah, that's the easier question to answer. The next move in Axis Bank will be on the upside. The Axis Bank is finding strong support at lower levels, which is what we saw when we saw the stock rally after dismal results. So there is support. Banks are doing well, private sector banks. For the longer term, Axis Bank will therefore increase at least 50% from current levels in the next 3 years. So we are looking at a target of 750. I think you should just hold on.
Okay, 750 is technical expectation on Axis Bank. Well, our last and final headline of the day, the announcement of a share buyback by PC Jeweler failed to excite the street or the stock. In fact, the shares were down almost 40% from the high point of the day, finally ended about 18% in negative territory. Even Vakrangi was on the back foot as it slipped 5% after PwC resigned as statutory auditors of the company. Indigo was also slightly lower today, closed about 0.5% down as Aditya Ghosh stepped down from the top job at Interglobe Aviation. We have Ashok Kumar on the phone. I think he has some sort of an investment or a position in Vakrangi. Mr. Kumar, what is your question?
Oh, okay. It's an SMS. I think you're not able to reach him, so he's SMS'd. He has 20 shares of Vakrangi at 222 rupees a piece. Has been holding it for a year. Should he hold or sell? He says he's a long-term investor. But Sanjeev, what should he do?
So, Lata, I think the stock is already losing 50% and it's in the worst of, rhetoric period between this and PC Jewelers. Every day some skeleton is undoing. And this Vakrangi has been a huge wealth creator over the last few years. So, my only unfortunate move would be to sell it and get into some better name, where we can see a lot of light. I would strongly recommend an ITC or an IDFC, where we are seeing very, very strong green shoots on the FMCG, on the other businesses, and we think those could be a better, recoup of your losses over a period of time.
Okay, a point taken. Sudarshan, I wanted to ask you about actually the other stock, Indigo. The exit of the top guy has not really shaken the stock much. It was a minor ruffle in the stock. Should this be used to buy at all?
Absolutely. This is a buying opportunity. Indigo has much higher levels. I've explained earlier how we should be selling Jet if we own it and switch to Indigo. And independently, Indigo is an investing idea. See, the best of people have to move about, and then there is a replacement. But the company structure, if it is good, doesn't change. You know that better than me, I guess. But it doesn't matter. It's a perfect stock to buy. And just a little word on Vakrangi. The gentleman should sell out, but how will he sell? It's on a down circuit every day.
Okay, this is the unfortunate part of getting into stocks where you're not sure of the fundamentals. Well, Sanjeev Bhasin and Sudarshan Sukhani, thank you very much for joining us. And all of you, of course, thank you very much for joining us. We're going to meet you only the day after on Wednesday morning with the markets. Until then, let us leave you with some more wise opinion that we got from S. Krishna Kumar of Sundaram Mutual Fund. Have a nice May 1st.
See you on Wednesday.
The rural economy is just coming back, into an upswing after 3-4 years. Last 6 to 8 months, we have seen some of the initial green shoots of recovery in demand on the FMCG side, there's been some amount of pickup on the tractor side for some time. Two-wheelers, again, the sales are pretty much larger growth in terms of rural areas than urban. Look at the car sales again. It's not the metros that are selling well, but it's the semi-urban and other tier 3, tier 4 markets in FY18. The earnings season has done extremely well in the first month. We've had a lot more positive takeaways from the results, and except the usual suspects, the corporate lenders, we have seen otherwise a very nice and rising earnings trajectory across various sectors in the economy, with double-digit earnings growth into the next 24 months. So this is where I think fundamentally the market looks good from a medium to long-term perspective. However, some of these macro things we mentioned and the election issues could again move the other way and create some volatility in the next 15 to 30 days, which is something which we can't rule out.